The method that I use to double my Forex account quickly, I've used this exact same method to grow 5 accounts from $50,000 to $100,000. Check my YouTube history. I show the P&L, broker statements, literally everything, and I called every single trade live to people in my members group. Let's go ahead and get into it. First 30 seconds of this video, I'm going to show you the system. Keep in mind, trading's risky. You're probably going to lose all your money. You shouldn't listen to some bald guy yelling at you on the internet. You should instead go and just learn trading on your own, or you should probably just go work at McDonald's because you're more likely to make money there. But if you're crazy enough to stay here and continue watching this video, I'm going to show you literally the whole system right here. So I first look at where current market price is, represented by this beautiful high production quality purple arrow. Then what I'll do is I'll draw the next clear resistance zone above price to the next clear support zone below price. Then I will simply wait for price to get to one of these areas. If it gets to the next resistance zone, I'll take a sell. That's it. And if it gets to the next clear support zone, then you guessed it. You are an absolute genius, I will buy right there at that zone. And if we get a nice bounce, then obviously I'll make a profit. Normally I'll go for at least a 1-to-1. The next zone is typically what I try to target. So sometimes it's a little bit more than a 1-to-1. Generally it's not less. And if price gets past the zone, in this case of a sell, then I'll usually hedge above the other side of the zone. So I'll hedge. If price breaks the support zone, then I'll get into a sell hedge here. This also works the same way with stop losses. You can stop loss on it, you can stop out on it, and then you just default on the loss, risk more in the next trade. You can do it the same way regardless of which risk structure you're using. Use hedging, stop losses, you could do dollar cost averaging, you could do a bunch of different risk structures. It all works fine, and it's all based around support resistance. I'm literally going to show you all the practicalities of this as we continue through this video. I mean, unless you have the attention span of a squirrel, then feel free to leave right now and just go immediately try to backtest this. If not, just some proof that this is actually what I do. These are in 2 trades I'm in right now. USD JPY on the daily chart, it's a break and retest of a daily support resistance zone. That's it. It broke resistance, came back to support, and I bought. I added to it as it went up. That's why it shows the position average a little bit higher, but that trades in like $3,500 profit. Same thing on Euro USD. Price broke and retested this support zone, turned into resistance, and then I sold. And if this wins, it'll be $8,000. I'll make probably like 13 or 14 grand on these trades combined, depending on if I add to them and if they work out and all this and that. So it's pretty awesome. It's pretty sweet. And it's also pretty simple. And I'm literally going to show you everything right here in this video. Let's pick a random number between 1 and 10, and we'll use that to illustrate here. So number 5. So we'll pick 1, 2, 3, 4, 5, CHF JPY. All right. So we're on CHF JPY. All the drawings are removed. We'll go here to the daily chart. In fact, let's go here to the 4-hour. Keep it like nice and sweet in between. So we'll scroll back to a random area. We'll click replay. We've already clicked that. We'll click start here. September 2021. Sweet. So here's what we will do. We will start. I do this with like a 50 to 100K account. We'll just start $1,000 and we're just going to double it. All right. This is high risk. This is degenerate. This is absolutely ridiculous and insane. You probably shouldn't do this at all. But if you're still crazy enough to want to do it, this is what I do. I'm just showing you what's worked for me. That's it. You do whatever the hell you want to do. So we'll go to CHF JPY. All we're going to do is we're going to buy at support. We're going to sell at resistance, and that's it. We will not do anything fancy. We will do nothing except simple support and resistance. So, all right, sweet. So we've got a resistance zone here. We've got a support zone down there, and let's see what happens. So price comes into resistance. Let's let it get nice and deep. So it comes into support. Sweet. So it came nice and deep into the support level. Doesn't get all the way to the resistance zone. Let's do this using a buy right here, and we'll do it with stop losses. You could, like I said, you could use hedging, but hedging is the exact same the way I do it if you just risk a little bit more in the next trade. So if we get stopped out, you know, we could have got hedged, roll out of it the next zone, this and that. Plenty of other videos on my YouTube channel about that. Let's do it with stop losses to show you the simplicity behind it. So stop losses here. If we're wrong, we lose 10%, which is like $100. And then if we're right, you know, we make a little bit more, in this case here at the next zone, if it goes to the next zone. So it tries to get to the next zone, fails, comes down and breaks the zone. So we lost 10% on this one. So if we were using hedging, we would be hedged at $100 loss. But instead on this one, we're just going to say we lost, you know, that much. We know that since price bounces about half the time at these zones, we're not going to take more than maybe like a 3 to 4 trade losing streak. Really, you shouldn't be taking more than a 1 to 2 trade losing streak. But even if you screw some things up, if the risk reward is a little bit better than usual, sometimes you'll lose a little bit more than half the trades. Cool thing is, it doesn't matter. The risk structure is what makes it profitable. You don't know where price is going to bounce at. Nobody does. So I don't try to obsess over exactly where price is going to bounce. Instead, I just enter where I think price will bounce, and I exit where I think price will bounce. Very, very simple. This zone looks kind of like rabid and fierce and kind of crazy and wild. So I will just use this next support zone and see if price rejects, which it doesn't. But it does come up and retest as resistance. Let's see if it can get a little bit deeper and then start to reject. So that looks good. So we'll take a sell here, but instead of risking $100 on this trade, we're going to risk $200 on this trade. This is the exact same concept of hedging, where if you get hedged, you wait for the next zone, close the profitable trade, and then add to the losing trade. It's pretty much the same risk structure as just risking one extra unit of risk on the next trade you take after a losing position. And yeah, so and then we'll look to take profits around these previous lows, so about a 1 to 2. And we're risking $200 on this trade. So let's see if this one works. So it does. So it narrowly misses the stop. Ooh, but luckily this is the 4-hour chart, so the spreads will be nice and tiny, so this wouldn't have hit. If this was the 1 minute, I probably would have said that was a stop out because the spreads would be wide enough to hit. But on the 4-hour chart, the spreads are not going to be that wide. They're going to be pretty tiny. Even with Forex.com, a regulated U.S. broker. I'm not affiliated with them. I just use them. They're one of my brokerages that I use. But like they still have small spreads. So sweet. So we risked $200 on this trade. So let's go ahead and factor in here what's going on. We lost the first trade. That was minus 100. Okay. Very sad. The next trade we risked $200 on, and it was about a 1 to 2 risk to reward ratio. Here, we'll fix that there. All right, 1 to 2. Yeah, there we go, folks. Hindsight 2020. So we made a 1 to 2 risk reward ratio, risking $200. So this one profited $400. So we're gonna add. So it's gonna be adding 400. The account's up to 1,300. We've grown at 30%. Sweet. Let's wait for the next trade. Simple support and resistance zones. Nothing crazy, nothing complicated, nothing ridiculous. We're just trading some trades. We're drawing some rectangles on the chart. We're not that smart. We're just idiots here looking at the Forex market trying to profit from whatever the hell happens. We'll see if price rejects here. If we can reject this zone, like get a little bear candle or something, we might look to trade it. No bear candle, no rejection. We'll go ahead and just sit this one out. This might work now, but it might also bounce as support. So we'll just end up, we'll just ignore that and we'll just leave it the hell alone. Let's adjust this zone a little bit thicker right here. Let's wait for a deeper retest, and then we can look to sell here at this zone. A little bit deeper. There we go. So a little bit deeper, and then we get that little rejection right there. So we're going to go back to our original risk of $100. Risking $100, ladies and gentlemen. We don't know where we're going to take profits. Let's just set it there for now, about halfway down the move. Could go all the way down to that previous low, but we just don't know, brothers and sisters. So we're going to risk $100 on this. We'll see what happens. Goes and it hits the stop loss. Now, when it goes and hits the stop loss, it actually comes back here to test this zone and then rejects it as support. So after it rejects it as support, we could have taken a trade literally right there as soon as it did that. It came back, tested, bounced, and then right there it bounced. This would have been a whole day of price action. You would have had plenty of time to see this on the 4-hour chart. I know that hindsight is 2020. I understand the next 2 candles have already gone into profit. I understand what you're thinking, like, oh my God, this guy is such a fucking regular guru. He's looking at what already happened and is playing it out. You already know the way that I trade because I've already explained it. I've already said as soon as it gets to support resistance zone and starts to bounce, that's where I take the trade. For future trades, I'll try to tick it forward a little bit slower because I just hit the play button instead of the single candle moving forward. But since you already know, it's exactly what I would do. It's the same old shit. Breaks and retest zones, I'll buy it. Test support or resistance, I'll buy or sell. It's the same old stuff over and over and over. So in this case, the entry will be right there. The stop loss will be just below that little wick that was formed right before we entered. And then the target will be probably here around the next zone. And for this trade, since we were using hedging as the risk structure, but to represent it with stops instead of hedging, we'll just risk $200 in this trade because that will be the same exact thing. So $200 in this trade, we'll see what happens. Need it to get all the way to that next resistance zone for this to be worth our time. Doesn't look like it's actually going to play out. Let's see if we can do a little bit of damage control here. Let us see exactly what can happen. We're going to just keep ticking this a little bit lower. And there's no closure right there. Let's go ahead and close that there at a loss. And instead of $200 of loss, this is $150 of loss. So I'm sorry, that's $100 because it's halfway to the $200 loss. So we lost 100 on that one and we lost 100 on this one. We'll just keep it at that. That's minus $200. Sweet. We'll risk 200 on the next one so that way we can continue trying to branch out of the risk. And we'll actually see if this bounces right here. We'll thicken the zone up like some gravy. We'll see if it bounces. So it does bounce. Let's just go ahead and get back in. And we'll do it at a $200 risk, nice white invalidation, and then a very, very modest target, about a 1 to 1. I have no clue what's going to happen here. That was such a weird trade. All right. So a 1-to-1 risk reward ratio. We risked 200. We made 200. Okay, we're back to where we were at before. So we're $200. Back to 1,300. Grow the account 30%. All right, sweet. Risk 100 on the next trade, and we'll see what happens. And if you'll notice, it's only right about half the time. Like wrong, right, wrong, break even, right. It's like it bounces 50% of the time at the zone. So it's like, don't try to be a hero. Don't try to be right about it every time. It's just, it's going to bounce or it's not. Just draw zones where you think are nice and clear, where price could have a nice bounce at. Wait for decent entries at the zones. And if you get a decent entry like you did right here, price gets into that zone, rejects, then you can enter a trade right there as soon as it gets to the zone. We're going to put our stop just above. We're going to go back to $100 risk for this, for our original risk for our initial position sizing. And the target there at the next zone, we don't know where it's going to bounce at, but that's it. So we'll let it play out. So it spikes up above the zone. So now we're going to wait for the next zone. Take $100 loss on this. We're going to risk 200 on the next to reflect what would be done in hedging. So we're going to wait for that next resistance zone if price can get all the way there. It looks like it might get there. When is this? October of 2021. I wonder what the hell was going on at that time in the world. All right, so price gets up to the zone. Is there any rejection? No, there's not a lot of rejection, but since this is such a super, super clear zone, and since we're going to be going in a little bit heavier, we can just go ahead and enter immediately right here at the zone. Sometimes I will enter immediately, sometimes I won't. It just depends on the context. A nice white invalidation stop loss. We'll go ahead and set the target. We might take it at 1-to-1, but we'll just go ahead and hold it, try to hold it for a 1-to-2 for now since we have a lot of potential downside. Price could come here into that zone. I wouldn't buy off that zone, but it'd certainly take profits there because it could bounce. So we'll click this forward candle by candle and see how we should manage this trade. All right, so it could go all the way up to that previous high and still be valid, so let's wait and see. So in that case, boys and girls, this trade is not going to really be winning. A little more than, this is like a $200 risk. It's a little more than halfway into loss. So let's say we lost we'll do like $130 on this. Looks like it's a little more than half. So we'll say we lost $130 on this, so we're out. This is minus $130. We're still controlling risk, and then we'll risk 200 on the next one to try to get back some of those beautiful profits that we lost. So that's that. We'll wait for it to come and retest this resistance zone as support. And also we need to kind of check back here to see, there's no clear resistance zones next to price. So there's nothing we can really do right there. We'll have to kind of play with the current support resistance zones that get set up as price continues moving. So we shall see, boys and girls, what happens. So price breaks past this zone, tests it as support and starts to bounce. So right here, that's the first green candle that occurred after that occurred. So we can get into that. We'll do $200 of risk. We'll put the stop. We'll put the inval just below those lows actually. And the potential target, we'll just do a 1-to-1. And that this way we can add to the position if it comes in here, this next support, because it's also really likely to bounce right there. So we'll see if this can play out. So we were going to add if it came to that support. It didn't go close enough, but it didn't get to our target either. So we need to let this just play out. Does it get all the way in there? No. This keeps going sideways. All right. So we never got our chance to add. We could have made a lot more on this, but instead we just got about a 1-to-1. This is fine. We'll do plus, that was what, 200 since we risked 200? Sweet. Now we're back to our original risk of 100 per trade. And we will wait for the next zone. Waiting for the next zone, fellas. Let's go ahead and take everything off the chart. I guess we'll have to leave these on just so we can show kind of what the win rate was. Kind of reflective of the win rate. I'm going to update these zones here. I'm going to draw that as like a big support, and I'm going to delete this little tiny one. Nice little updates. So it looks like price is breaking and retesting this zone. Let's see if we can start transitioning back up. If not, this zone looks like it'll break to the downside. We'll have to see. Yeah, so it goes. I actually think that's going to break, so we'll leave that alone. We'll wait for the lower one. There we go. All right. That was still not a good entry, though. We need it to push a little bit deeper for this to make sense. So that right there looks good. Sweet. So there's not really a lot of rejection, but since it's there at the support zone and this is the only entry we might get, we'll take a buy right there. Just $100 risk. $100 risk. I'm trying to take it slow enough that way I don't miss a beat here. This looks like it's going to break below the zone, but we'll just let the stats play out. Yep, breaks below the zone. Sweet. Minus $100. That is that, my sweet children. So minus $100. We're going to go minus 100. We gave a little bit back, so we're keeping our losses nice and small, keeping our profits a little bit bigger. So it gets here to the major support zone, starts to bounce. Let's wait on a little bit deeper of a test. That looks like it could just shift back around a lot lower. There we go. That's a proper test, proper deep test of the zone. We can buy after that. And since we had a losing trade for $100 before, we're going to increase the risk by 1 unit of risk. We're going to do that to $200, and we'll try to target that previous high up there. Because since it's a daily zone, it should send price off pretty far if it's going to go. Narrowly avoided the stop loss there. Let's see if this finally bounces. Doesn't look like it's going to work. I mean, there's not really anything we could do. It's either going to bounce or it's not. I'll just take this loss if it goes. And if it goes into profit, which will be random, but it could, we will see. Look how random that is. I expected that to lose. Oh, so boring. So freaking boring. All right, finally. Let's just fuck that. Let's just say we're out right there. This is a little over a 1 to 3. Just happy to be out, man. That shit took so long. I thought that was going to break. We risked 200 on this, and then we made, so like 600. 1 to 3. Sweet. So plus 600. We'll go back to our little cute $100 risk. We've got the account almost to the growth target. We've almost doubled it. We just really need 1, 2, 3 more good trades. We'll see what happens. We're also here at a resistance zone, so we'll wait for it to push a little bit deeper, and then we could potentially get into a resistance trade, a sell at resistance. So it looks like it's already kind of setting up here. So remember, this is just $100 risk. And, we'll enter it there. We'll put our little stop just on the other side of the zone. And then we'll try to go for like a 1 to 2, but we'll see what happens. We'll see if we can just get our growth target met, which is a little bit less than 1 to 2. We'll see if it happens. We got a nice distance stop out there. Nice potential for profit. And it stops out. Oh, so much booty right here. So we'll do minus 100. And then the next one we'll risk $200. We need to have a nice little winner, really, to be able to make this work now. So we can wait for price to come to retest this zone. Then we can look to buy at support. It doesn't really pull back deep enough. Oh, there we go. It did right there. Sweet. So it pulled back there to the previous low. It started to bounce. I'm not going to be a hindsight guru on this one because I've already clicked way too fast and it already bounced right there and went up. So I'm just going to, if it comes back again, we might enter. We'll see. Yeah, missed that perfect trade because I clicked too fast. And I don't want to get hated on in the comments too much. Y'all can hate on me a little bit, but not too much. I don't want to be too much of a hindsight guru. Like, oh yeah, guys, look, the move has already played out for a 1 to 50 risk to reward ratio. I'll just say I would have entered there. No, I always like to do it beforehand to show the transparency. So this right here, price comes to the zone, tests, starts to bounce. Entries right there after the rejection, and then stop loss just below. And we are risking $200 on this one, and we're trying to go for a higher high. We will see if this one plays out. Is it going to bounce? Brothers and sisters, no, it breaks through the zone. I'm going to go ahead and get out of that right there. It's about $100 loss. A little more than $100, so we'll do like minus 120. So minus 120. So we're able to avoid a little bit more of a loss there on that. 1650. We do need us a nice winner to be able to go and get the chicken dinner, and that wouldn't have worked out. So a little bit deeper, no rejection, just a straight bear run. Momentum running downward. So we do come here to this resistance zone and paint some rejection here. Sweet. All right. Well, I'm going to go ahead and it's worth a shot here. We'll do $200 of risk after that first rejection candle. And then we'll do a stop loss above there. And honestly, a target like on a lower low. If this is going to work, it's going to break past these lows. We'll watch and see what it does right there at the lows. But we're going to try to take a little bit more profits if it goes past. We'll have to see. This is, I mean, if this even works at all. Again, we're going to watch what the candles do if it gets to that previous low. So does it reject? Yep, it starts to reject. Let's go ahead and get out right there. Shit. I'm going to get out right there. This is about a 1 to 2, depending on where you would have closed it. There we go. Guru, hindsight 2020. Move it up like 0.05, a little bit more. We got a 1 to 2. There you go. See, perfect. I'm a god trader. So we risked $200 on this, so we made $400 in profit. So if we do 1650 plus $400 in profit, that means the account's now to $2,050. We grew the account. Now, if we're being realistic, are you going to trade one pair on one time frame for all time? No, obviously not. There's 26 FX majors. You'll be able to trade a bunch of different pairs, and you can do this if your broker will allow you to hedge or, do the risk structure like this with high enough leverage on stocks, crypto. I do this on crypto. I'm literally in a crypto trade right now on Sol USD Tether on this KuCoin platform. You can't see it because the camera is going back and forth. But literally, I do the same thing over and over, and I just rinse and repeat. Now, what is the average win rate for a system like this? I don't know. Let's go and check it out here, okay? We'll go through some of the metrics here. We had a loss. We had a win. Loss. What, a break even? Then a win. Then 2 losses. And then a win. And then a loss. And then a win. And then a loss. And then a loss. And then a win. So it's roughly 50-50. Maybe we had an extra loser in there somewhere. You guys can calculate the metrics. Here it is right here. I know we had some break even, so I'll just do the whole screen like this. You can pause it and you can just look at everything, and you may have to go and calculate some of the metrics for yourself, because I remember we had some break evens or something. But when you work it out long term, after like 50 to 100 trades, it's roughly 50-50. You're right half the time, you're wrong half the time. That is why I like using hedging as the risk structure. And again, you can do this with stop losses. If your broker doesn't allow you to hedge, or you got low leverage or whatever, it's cool. You can do the same thing by just risking 1 extra unit of risk for the next trade and try to make sure that next trade wins. If you're right, the losing streaks typically won't be more than like 2 or 3. It gets kind of a pain in the ass because you lose the first one for 10%, you lose the second one for 20%, and if you lose the next one for 30%, I mean, you're down a lot. That's 30%, then 20% plus 10%. You're down 60% of the account. That's why you saw me oftentimes trying to get out a little bit of a partial loss if it didn't work out. And then every now and then you get a nice winner. You're holding to the next zones. Your risk rewards will be anywhere from like 1 to 1 to like 1 to 3. It just kind of depends. Like maybe 1 to 2 sometimes, 1 to 3. It just depends on where the next zone is at. This is a system that just relies on you just chilling, looking at current market price, setting an alert at the next support or resistance zone, and waiting for price to get there. And if price gets there and it's a resistance, you sell. If price gets to a support, then you buy. You can use whichever risk structure you want. You can dollar cost average in at the next zone or just hold the first position. You can hedge if it breaks the zone, wait for the next zone, then manage to hedge at the next zone. You can do the same risk for every single trade and just try to have a little bit more of a better risk reward. You can risk a little bit more on subsequent trades, knowing that your average losing streak is not going to be X amount. You can do so much stuff and more. I teach all of this in my compounding course in the close friends group, my full program. Second link in the description below is everything that I offer as far as services, like stuff that I teach with trading. And you can also learn literally everything else here on my YouTube channel for free, like the way that I trade. You can also follow my analysis for free on my Telegram channel, which is the first link in the description. If you want to work with me a little bit more closely in one, like the compounding course, you literally get a one-on-one mentorship session with me. That's right, me talking to you here in this video right now. You can get on a one-on-one Zoom session with me in the compounding course and ask me any personal questions. That way it can like kind of speed up the path to profitability. Again, I can't guarantee you anything. I don't know your work ethic. I don't know you. I don't know if you're smart enough to do this. I mean, I consider myself pretty stupid, but I don't know you. I don't know if you're actually going to make this work. A lot of people just give up, and it is what it is. Trading's pretty hard. Trading's pretty risky. Can't guarantee you anything. It is what it is. I can only show you what has worked well for me. So if any of that interests you, join my free Telegram channel. My free Telegram channel is the first link in the description. And then my website's just below that, second link in the description. And feel free to check out my other YouTube videos. I'm not going to ask you to like or subscribe or comment or any of that shit. You do whatever the hell you want to do. I just made this video to hopefully help you out and give you a little bit of a different way where you can approach trading in a super simple way while controlling risk. It is a marriage of such a beautiful combination. Keeping things simple and controlling risk. My wish for you is that you'll be able to be profitable. Hopefully my YouTube channel and my stuff can help you a little bit. I'll see you in my free Telegram, and hopefully I'll see you in something like my close friends group where I share all these trades live and we chat. We do live Zoom sessions every day, and also the compounding course or the full program where you can get one-on-one mentorship. Cheers. See ya.